Okay, everyone, let's talk about the accounting profession. The accounting and bookkeeping profession goes back to the 1600s, but we won't talk a whole lot about between the time of 1600s and 1800s. Just know that England and Scotland dispatched a bunch of accountants to the United States, or at that time it was just the colonies, to audit companies that they established in the New World. So between the 1600s and 1800s, those British accountants took to train the Americans in accounting procedures because we didn't know very much about them. And as the profession grew, there were public accountants that offered auditing services and private accountants that kept the books for companies, same as it is today. In 1882, the Institute of Accountants and Bookkeepers in the city of New York was established and to provide training and support to accountants. So it was more of an educational institute. In the article by Anita Dennis that you should have in your among your readings, the article is "The Key Dates for the Profession," dated 2000. We find that the accounting profession got its start as an organized profession in 1887 from the formation of the American Association of Public Accountants. Members came together to establish moral standards in the practice of accounting. So it was much more of an ethical thing than it was to establish standards. In 1896, New York passed a law recognizing accounting as an accredited profession, similar to doctors and lawyers. And the law established the title of the Certified Public Accountant and outlined the requirements to become a CPA. In 1899, Christine Ross became the first female CPA in the United States, and her certificate, I believe, was 143, so there were a few ahead of her. And her offices were 2 blocks from the New York Stock Exchange at 45 Broadway. In the early 20th century, a series of lawsuits against public accountants laid the groundwork of the professional liability accountants bear for exercising diligence, care, and proper ethics in carrying out their duties. They were supposed to look for fraud, and in some cases they didn't do a very good job about that, and the courts held them liable, professionally liable. In 1913, the United States passed the 16th Amendment to the Constitution, and all of a sudden we had a federal income tax. Prior to that, business executives and small business owners resisted such accounting practices as recognizing depreciation or accruing expenses at the end of an accounting period. These types of accounting practices generally decreased reported net income, and they didn't like that. Now, with the income tax, it became evident that such practices produced lower taxable income, and all of a sudden, executives and business owners thought, hey, maybe this accounting thing is okay, because we could save a lot of income tax by accruing and recognizing depreciation in our accounts. So all of a sudden, the stature of accountants grew tremendously, and the accrual accounting became the standard of American business. With the rise of big businesses like the monopolies and the big trusts at the turn of the century, Congress got very antsy about things, and so they started to call for mandatory audits of publicly traded companies. there was some amount of recognition that audits were also needed in private companies because, after all, they would require loans from banks. However, there was still no formally accepted accounting principles in the U.S. So, in 1917, the Federal Reserve published the first set of approved methods for the preparation of balance sheets. Well, okay, fine. Now we've got the balance sheet covered, but that was pretty much where it ended. Various government agencies like the IRS, the Federal Reserve, and the SEC continue to issue these bulletins, other types of rules for accounting procedures and disclosures. Lawsuits continued to hold accounting or auditors accountable for negligence and fraud, and then the stock market crashes from 310 to 69. And I would remind you that today it's at 35,000. The Dow Jones Industrial Average is hovering right around 35,000. But back then in 29, between the years of October of 29 and I'll say 1932, the stock market decreased by 78%. The investing public largely lost its faith in the accounting profession. In spite of the above, the accounting profession doesn't establish the Accounting Principles Board until 1959, and even then could not force compliance with its opinions. And of course, the APB only issued opinions. They didn't issue standards. And a lot of accountants decided, if I don't like your opinion, then I'm going to account for things the way I want to. So there was a great deal of resistance to the APB. Now, after years of criticism and lack of confidence among the professionals and the SEC, the APB is replaced by the Financial Accounting Standards Board, or the FASB. By then, now this is in like 1973, I'm going to say, but by then the GASB, the Government Accounting Standards Board, had already been created in trying to promulgate acceptable accounting standards for government, state and local government agencies, as well as nonprofits. Now, the FASB is now the standard-setting board for U.S. generally accepted accounting principles, that's GAAP, and the International Accounting Standards Board, or the IASB, out of London, promulgates the standards known as the International Financial Reporting Standards, or the IFRS. It was established in 2001, although the precursor to the IASB had been around for, I'll say, at least a couple of decades. So let's just talk about who controls the CPAs. Obviously, CPAs are required to have licenses, and each state is responsible for first establishing the requirements for individuals to become a CPA. Some states have greater requirements than others. In some states, a bachelor's degree is sufficient. In others, a master's degree or the equivalent thereof in accounting is required. They also establish so many hours of accounting in coursework. They require ethics courses and other things as such. They also require continuing professional education, required to maintain one certificate. So each year you have to pay to renew your license. As well, you have to report on your CPE to ensure that you have met those requirements. They also, the state is also responsible for governing the practice of public accounting within the state. Remember that public accounting has at the forefront of its job to protect the interests of the public, and therefore the state will monitor folks practicing in public accounting. Anyone who holds themselves out to the public to perform accounting must be licensed as a CPA in that state. If you're not, the state can issue a cease and desist order to those who are not licensed in the state and impose fines for failure to obey such orders. They can basically send the sheriff down to lock up your place of business. Even CPAs in corporate or government practice must renew their license each year and meet the CPE requirements. If you don't, then your CPA license will be suspended and your certificate can actually be taken away. The state can revoke one's certificate for failure to meet the requirements to maintain it, such as CPE and paying the fees to keep your license active, or for acts that discredit the profession, such as being convicted of a felony or a violation of the professional ethics. Obviously, convicted of a felony is straightforward enough to understand, but now a violation of professional ethics. There are stories where a CPA said, I'm not going to give the tax documents back to the client because they didn't pay me. Holding on to those documents is not a proper remedy, and that is a violation of professional ethics, and some CPAs have been sanctioned for doing those types of things. Now, the main areas in public accounting include auditing, tax preparation, and management advisory services. There are obviously lots of little niche markets in the area of public accounting, perhaps forensic accounting. It could maybe personal financial advisory on investments and so forth. But beyond accounting or this public accounting, accountants have a number of other opportunities. Now, if you're not a CPA and you're working in the tax preparation business, you can do that. You just can't hang a shingle out that says, we do accounting. You can say tax preparation. So the labeling of your business is very important. If you're in tax preparation and you're not a CPA, it's highly recommended that you should become an enrolled agent with the IRS. That gives you the authority to practice before the IRS. A CPA is automatically authorized to practice before the IRS, even if they're not an enrolled agent. Now, in the corporate world, corporate accountants serve as staff accountants, analysts, controllers, directors of payroll, directors of finance, chief financial officers, a host of other type of officer positions. Now, just like in the corporate world, the same accounting positions exist in government entities such as states, cities, counties, school districts, college districts, municipal utility districts, as well as not-for-profit groups such as hospitals, charitable organizations like the Red Cross, the YMCA. You've got churches, you've got private schools and universities. So those organizations require the same kind of accounting positions. Regardless of the field that the accountant works in, he or she is expected to carry out their duties with integrity and honor, not bringing discredit to the profession. And each group will have their own professional ethics to abide by. There are numerous certificates that accountants can obtain according to the specialized field in which they work. So you're encouraged to gain those credentials that promote you as a prepared professional.